All right. Good morning, everybody. It is October 18th, 2023, 8:45 a.m. Today is Tesla earnings day for those that care about Tesla, which I imagine is most people, even if you don't own Tesla stock. We got Netflix earnings. We got Tesla earnings. Today in the morning, we got Procter & Gamble, consumer staple brand. We got Morgan Stanley. And we got a bunch of other companies that reported, and their earnings we're going to be going through today and see what their results are like. So far, Morgan Stanley and Procter & Gamble actually not too bad, and we're going to go through those results. But the main show is going to be today after I come back from the dentist, because I have a dentist appointment at, 2 p.m.? And I'm really hoping that the cute assistant that was there last time at the dentist appointment is there this time as well. Her name was Lexi. It'll be cool if Lexi is there again. But after that dentist appointment, I'll be back home and we'll cover Netflix and we'll cover Tesla. Also, I have a question for you guys. This stream should officially be in 1080p HD. I upgraded the StreamYard thing, so I hope it shows on the YouTube. On my side, it doesn't look like. Wait, no. On my side, it definitely looks 1080p. Yeah. So it should look full 1080p. There should be a substantial difference from the past couple days. Let me know if you think that is the case, but it should be good. Casey says Amit's gonna floss at the dentist. Bro, she was so nice last time. If you guys saw my tweet, the dentist was like, your family has a history of diabetes and heart problems and teeth problems. Then I stopped the dentist. I was like, and a history of looking good. And the dentist rolled her eyes, but her assistant started laughing. And I was like, oh, so her assistant thinks I'm funny. That's kind of cool. So, yeah, it'll be fun to see them again today. And I got to go get my crown, get my teeth to stop hurting. And then we'll get into Tesla and Netflix. So a big day, heavy packed. You guys said it looks no different. All right, maybe need some time to update. On my end, it actually does look a little different, but hopefully on your end, it looks different soon. Because right now it needs to... I upgraded, so hopefully it does look different. Zach Wagner, Mr. Seymour Duck, SP Narwhal, Carter Deli, Kumi, Missy Iger, Andy. Thank you all for being here. Garcia, John, Noland, Joseph, Meow, Tony Jow, Adam C. Bricks look even faker. That's mean. That's just mean. Zach Wagner, again, thank you for being here. Sam, Kyle F. It's 1080p, but looks no different. All right, then it's 1080p, looks no different. Noland, Dex, Tony G, my guy. I told you I'd be here. Tony, thank you for being here. Blake Anderson, Daphne, inbound. All right. Let's get right into it with the beginning of the news for today. First thing I want to start off with is President Biden. President Biden is officially in Israel as of right now. He just had a meeting with the prime minister, and they discussed a lot of things. Now, one of the reasons why this meeting is incredibly important, and one of the reasons why it's obviously going to affect the stock market and a lot of things going on, is because as of last night, and I'm sure a lot of people know this already. If you don't know this, then I'll be sharing it now. There was a blast at the hospital in Gaza, one of the main hospitals in Gaza. I'm forgetting the name of it. And it's reported that 500 people died. And if you look at some of the portraits and the sort of the photos of it, there are literally hundreds of just dead bodies, like bloody dead bodies, a lot of them children, all on the floor. And the Palestinian officials actually held a press conference in front of those dead bodies to make a statement. Now, the Wall Street Journal reported yesterday originally that Israel had striked them, this hospital, via an airstrike. And Israel was trying to obviously kill Hamas, and they ended up striking a hospital with pure civilians. And then the Wall Street Journal retracted that statement and actually said, wait, Israel saying they had nothing to do with it. Palestine actually launched this attack. So right now, the entire market and world is confused on who launched this attack. Was it Israel or was it Palestine? Right now, we actually don't have a definitive answer yet. The people that are saying Israel launched this attack, their core argument is that the strength of the missile, it's called a Jad-2 missile, is so strong that there's no way that Hamas would have been able to create something like that. The people saying that Israel actually didn't launch the attack is saying, number one, why would you believe Israel or Hamas over Israel? But number two is that Hamas gets these weapons by Hezbollah and Iran. So if they get these weapons by other people and then they launch these weapons, then, at the end of the day, it doesn't really, it actually makes a lot of sense that they have these weapons. And the idea that Israel had to launch it just based on the strength of the weapon doesn't make sense. All in all to say, President Biden was on a flight yesterday when all of this started happening. And now he's in Israel and he's showing his support for Israel. But if it turns out that Israel killed 500 people in a matter of seconds because of an airstrike that really did not need to happen, there's no need for you to bomb a hospital, even if there were some terrorists around. Like, there's absolutely no need to do that. That's going to make tensions definitely not as easy as they were before. Before, Biden had his unequivocal, unequivocal support. Now it's like, maybe that unequivocal support isn't as unequivocal if Israel did doing the attack. The media ran with that, LOL. Yeah, so it's going to be really interesting to see how this ends up turning out. Justin says it was Israel, strong missile, and media trying hard to cover it up. Inbound, somebody did it. That is correct. Somebody did. And so what does this mean for the stock market? Ultimately, it just heightens tensions and makes these geopolitical issues a little bit worse. Let's just say Israel did it. What is Biden's response? Because you're not going to stop standing with Israel, right? You're not going to be like, oh, I'm not standing with Israel anymore. I don't care about Israel. Or you're, if Israel didn't do it, then if you were angry against Israel, you have to act as if you're not angry anymore, right? You have to retract your statement. So right now, Biden has basically said, we are giving Israel the benefit of the doubt. And the benefit of the doubt is that, look, we believe them when they say that their intelligence shows they did not do it and Hamas ended up doing it. But if they're wrong on that, then that's definitely going to be a weird way to interact. Geopolitically, some more updates on this is that the president of Jordan was supposed to have a joint meeting with the president of Qatar and the United States, and that meeting was canceled. He was basically like, look, after Israel bombed an entire hospital with 500 people, we really don't feel like meeting them anymore. And so this is a very sticky situation with what's going on right now. Potentially, this could be escalating tensions. Again, there was no need for 500 people in a hospital to die. Now, if it was Hamas using their people as a human shield, I think that gives Israel even more reason to eliminate Hamas, right? Like, that supercharges the tensions and really gets the world behind their narrative. If it was Israel and they just missed their target or whatever, that means this war is going to be incredibly bloody, and there's likely going to be many, many more thousands of people in Gaza that are going to die if Israel has shown that it doesn't care to kill 500 people if they ended up doing it. So we're going to see what ends up happening, but over the next couple of days, we will get some type of answers. Ken says, thank you for 1080p. Okay, good. So I upgraded to 1080p, and it seems like some of you guys can see it. So that's awesome. If you guys are seeing 1080p, that is great. That means the stream is getting better. Perfect. Awesome. Okay, so that is the update on what's going on with Biden and Israel. We'll probably talk a little bit more about it in a bit as the market evolves. But as of right now, Biden is literally in Israel holding a press conference with Prime Minister Benjamin Netanyahu. Quick updates on oil and gas. Oil is $91.21. Oil has continued to rise up. Here's the price of Brent oil, up 1.46% on the day. I think the reason for this is not only the Russia sanctions, but again, what's going on in Israel, it can escalate and it can lead to supply chain bottlenecks and just potentially more inflationary pressures on things like gas, especially since, that is exported the most from the Middle East. So we might be seeing that as a little bit of a reason for why oil is going up. $91 is not good for CPI. It's not good for inflation. We had 90 to 94 pretty much all of September, and that's what had CPI elevated. Last month, it was unchanged, but the energy index was up 1.5%. October is supposed to be a really good month for CPI, and so far, the energy index is showing that that's not the case. And on top of that, you've got the U.S. 10-year back at 4.9. If you round up from 4.8 to 7, you get 4.9. And that's not good either because, well, we were at 4.5 just a couple of days ago. That's what led equities to kind of get to a theoretical bottom and move higher. S&P 500 right now is at 433.75, down 0.52%. And the reason we're seeing a lot of these stocks down in the pre-market, Apple is down, Palantir is down 1.18%, 1763, is likely because this 10-year is continuing to inch higher in terms of this yield. So we thought we were done with the 4.9. The 2-year reached 5.2 yesterday, which was the highest in a long time. The 10-year continuing to raise higher as well. Garcia says, let's round it down to 4.5. I wish that's how math worked. If we could round it down to 4.5, that would be awesome. But yeah, 4.9, definitely not good for stocks. And today, might be a little bit more of an aggressive sell-off because that 10-year is inching higher that we're seeing. I'm not saying, yeah, my money markets are still holding strong. So 10-year and oil is up, which likely means today stocks might not be up. If stocks continue to be up, then that's great. We're dealing with a high 10-year and a high oil, and we're not caring But as of now, that's likely not seeming to be the case. Han Wen Cheng, good morning from Taiwan. Han Wen, thank you for being here today from Taiwan. Okay, let's go to Morgan Stanley earnings. They had earnings today as well. Let's get a little update on them. And we're going to see how they did. And actually, the stock's not doing too well, but earnings were not too bad. Again, one of the other larger financial institutions in the United States.
All right, Morgan Stanley results are out. Leslie Picker has those numbers. Leslie.
Hey, Becky. Yeah, here what I see, a top and bottom beat on the top and bottom lines for Morgan Stanley, reporting EPS of $1.38 per share. That's about 10% above estimates for the bottom line. Revenue coming in above consensus as well at $13.3 billion for the quarter. In looking at its individual businesses, institutional securities came in around $5.7 billion. That beats consensus of $5.37 billion. That was lower, though, than the same quarter last year. Banking, lower, which we've seen across the street for the last few quarters now. Banking came in at $938 million. Equities trading was higher year over year at $2.5 billion. Fixed income coming in at $1.9 billion, which was slightly down from a year ago. In the global wealth management business, there was a slight miss at $6.4 billion versus estimates of $6.6 billion. The margin there, though, 26.7% in the quarter. Investment management revenue was $1.3 billion, which was actually up 14% from a year ago, although a slight miss relative to consensus. Operating expenses for the quarter, a little under $10 billion, which was slightly below what the street was expecting here. And CEO James Gorman talking in the note about delivering solid results while the market environment remained mixed for the quarter.
Look, that's not bad. That's not bad at all. As we're seeing on Morgan Stanley, the stock is down a little bit because of their wealth management division not showing some of the results that they want to see. But they are in line with every other bank so far that is reported. Bank of America, we'll talk about ASML in a second. These guys are down pretty badly on some missed earnings. But Bank of America, JP Morgan, what's her name? Bank of America, JP Morgan. What's the other one? What's the other one I'm forgetting? Goldman Sachs. Goldman Sachs. All of them did well. All of them did pretty damn well. Earnings per share beat by 10 cents, up 1.38 versus 1.28. Revenue, $13.27 billion versus $13.23 billion. So profit fell 9%, and this is similar to Bank of America and JP Morgan. Actually, JP Morgan profit increased. I think Bank of America profit decreased. And Goldman Sachs profit decreased. So we're seeing profit declines in these banks, but in a tough sort of macro environment that we have right now, reduced profits is okay as long as the bank itself is stable, right? As long as the deposits are not falling off a cliff. And even though deposits are falling, they're not falling off a cliff. As long as the core business is not dying at the end of the day. So this is not bad at all to be seeing some of these results from Morgan Stanley, Goldman Sachs, and JP Morgan. Again, they're not like stellar, amazing bull market results, but they're definitely not, oh my God, we're in a bear market. Like these banks aren't doing financing. They're not giving out loans, yada, yada. Like they're too conservative. That's not happening right now. US Bank, I don't think reported yet. I think they report. Truist, I thought was reporting today. It's actually reporting tomorrow. I was excited for them to report today, but they are reporting tomorrow. US Bank is reporting. Oh, they did report. They did report. Okay, yes. Let's look at US Bank. So US Bank, another bank that a lot of people care about, and I think one that's aggressively down this year. For the third quarter, net interest income was $4.27 billion. It earned 1.05 cents a share, so they beat by 3 cents. Average total deposits were up 3%. Wow. Average deposits were up at this was USB. US Bank. Yeah, USB at 3% versus $512 billion. That's not better. Let me try to find a better article on this that has more clear results. There you go. US Bank. Okay, so this is from Bloomberg. So profits are falling at US Bank. This is similar to Goldman Sachs, Bank of America, JP Morgan, and Morgan Stanley. So we're seeing banks show profit declines. Adjusted earnings per share came in at 1.05 cents. However, revenue is up and the bank still is doing fine with deposit growth. Yeah, look, that's not bad. Those are not bad results at all. US Bank made their numbers. Correct. US Bank made their numbers. This is really encouraging. Seeing the financial sector show that their banks are doing well, I think is incredibly important for some of the rest of the banks. And it gives me hope that Truist and some of the other regionals are also going to do well. So far we had Morgan Stanley, Goldman Sachs, US Bank, JP Morgan, and Bank of America basically do well, beat on EPS and revenue, show declines in profits, which is normal given this macro environment, and show little to relatively small declines in deposits, and some of them, like USB, showing that their deposits are actually growing multiple percents year over year. That's not bad. That's not bad at all. And as David says, that's when SoFi comes into play. So it's actually setting up really nice for SoFi shareholders. The banks are doing well, so there's not a cataclysmic sort of contagion within the banks like there was in March of 2023, meaning that maybe the banks are investable given they are severely undervalued, at least the regionals, from their book value. But it also means that deposits are leaving some of those banks and coming into SoFi, which is great for SoFi because SoFi is taking some market share, but it's not taking like dramatic market share to the point where these banks are collapsing. And you wouldn't expect SoFi to take hundreds of billions of dollars of deposits, but even if they get 2 to 3, 4 billion for a growth company at the valuation that it is right now, is not bad at all. So in terms of the banks doing well, we are seeing a great result from the banks, and we'll get into some other earnings later from consumer staple stocks. Let's look at Jason Tennant. This guy has been bearish the entire year. His biggest argument right now is bond yields. He's been calling for the S&P to go to like 3,600 for a long time. He's on CNBC today. Let's see his thoughts. Again, the bond yield 10-year at 4.9. We just saw banks showing really good results. Here's how he is trying to make sense of what's going on with the yields.
Markets have been remarkably resilient given the geopolitical headwinds, and a surprise, bond yields have not rallied meaningfully. Jason Trenner's here, Chairman and CEO of Strategas. Is that right? So you think bond, you're calling, so it's the opposite for the bond itself. So you're surprised that the yields aren't even higher than they are right now?
Well, I'm really surprised that yields aren't lower.
So you're saying that you're surprised that bonds haven't rallied,
right?
So the person, yeah, okay.
Okay, so I think there would have been a flight to quality given all the things.
So it's not what you're saying.
Yeah, so it's not what I'm saying. But
Okay.
I think there should have been a flight to quality, but by the same token, wars are inflationary, and I think we're just reverting back to the mean as far as bond yields are concerned.
You're not turning bullish all of a sudden on stocks, are you?
No, I'm more cautious. I do think, I've had a reevaluation on the recession this year because I do think if I miss something, it's clear that the labor markets are much more resilient than we might have thought, and that might be because we're short of labor, particularly working people, entry-level workers. I just think we don't have enough of them. So despite the fact that profits have been a little bit lower and profit margins are lower, companies have been very loath to lay people off. So that's the unemployment rate is at 3.8%. You're at full employment. So it's hard to get a recession out of that. But it also is hard to control inflation.
You think that the relative stability you're seeing in equities is masking some underlying weakness that is yet to be realized? I mean, are we on a precipice, or is this really showing that the underlying fundamentals are still good? Because the world is I mean, the world. I've seen Jamie Dimon and others say they've never seen things more concerning. The geopolitical, the economic backdrop. It's really frightening, even more so than normal.
I think he's right. I think there's a lot of things that are frightening. The thing that frightens me the most right now, I have to say from a market perspective, is bond yields and the fact that in the absence of quantitative easing, in the absence of the Fed buying treasuries, treasury yields are going to move higher. And that's because our spending is out of control. We're running a budget deficit that's 5.5% of GDP at full employment. We've looked over the past 70 years. We've never run a budget deficit of 5% of GDP when the unemployment rate wasn't above 7%.
Jason.
That is also a good point. I mean, most people in America are employed. We saw the jobs report came in hot. There's a lot of more jobs openings, yet we still have a deficit. And I think a lot of that is obviously from the COVID printing of stimulus money, but it is a point he makes. Does that mean the economy has to crash? I don't know.
And, people have pointed to a lot of these concerns for quite a while, and then the government steps in and does something to change it.
That's right.
What would stop the Fed if things get really out of control from bringing back QE?
No, it's a great, and listen, we brought back QE for a short period of time after Silicon Valley Bank failed.
Right.
We
switched course this year. But when I say this, people are like, "Oh, that's not going to happen for a very long time." We switched course this year.
No, it's debatable whether. I personally think it's a decent bar bet. No one would ever know. But if we let Silicon Valley Bank fail, I'm convinced we would be in recession already.
Mm-hmm.
But we didn't. The Fed flooded the system with $400 billion of assets. We essentially backed.
So we still have a Fed put there.
Every deposit.
I think forever. Like, how do you ever convince people there's not one?
I think the only difference now is that two things that are different. One is that inflation is a binding constraint, where in many ways, as I've said before here, the Fed is fighting the federal government to bring inflation down. So if you're serious about bringing inflation down, it's hard to do it if you're running massive budget deficits. That's the first.
See, the problem with the argument here, and I like what he's saying, and I think it makes sense that he hasn't participated in any of the market run-up over the past year, though, is because his argument is the S&P deserves to be at 3,400, 3,600 because of the logic that our debt to GDP ratio is inching towards 120%. And at full unemployment or full or like max unemployment levels at 3.8, 3.6%, we are still seeing a 7% deficit. The problem here is that if he's wrong about inflation naturally coming down, meaning the Goldilocks scenario of the Fed having the soft landing, which, by the way, JP Morgan actually thinks is very possible going into 2024, then he's wrong about everything. You can't just say gloom and doom, look at what's going on geopolitically, look at the bond yields, look at this, look at that. And then if there's one piece of data that goes against everything you're saying, which is the core thesis breaker for everything, all that stuff doesn't matter, right? So if inflation comes down, which we are seeing, housing is going to start to come down. We are going to see, hopefully, gas prices eventually start to come down. And I mean, I'm seeing it already. I know a lot of people are seeing it across the country. Gas prices are getting cheap. Like, I haven't seen $3.15 in a while, and we're seeing that right now. And then on top of that, right, the consumer starts to weaken a little bit. That also helps inflation. If all that happens, I don't know if he can definitively say this like idea of just because the yield curve is inverted, all this bad stuff has to happen. I just don't know. Especially on top of that, if Q3 earnings is going to be good. We're going to do some Tesla Netflix earnings previews in a second, which makes me skeptical about the bears at this point, given how wrong they've been over the past year. But then again, 2024 might be a disaster and something might break, and that's why the Fed has to lower rates. We'll see what happens. But as of now, with earnings being okay and the banks doing pretty damn good, like, look, here's my question. If the banks are showing great deposits right now, again, Morgan Stanley, JP Morgan, Goldman Sachs, Bank of America, like they're fine. They're handling their AOIC losses, even though the Fed has high interest rates. At what point do the banks break? Because you do also need the banks to struggle a little bit if we're in a recession, right? Like, you need to see some volatility there. And as per these Q3 earnings, we are seeing zero volatility in the context of banks outside of some profit declines. And so ultimately, we'll see how it ends up going. Okay, reminder to everybody, 1080p is available on the stream. I just upgraded today, so please click the 1080p option on YouTube so you can see my face in a more beautiful fashion. Okay, we have 21 minutes until the market opens. Let's do some Tesla previewing of the market. I want you guys, let me do a poll in the chat, actually. The poll is going to be, do you think Tesla is going to go up or down? I will be streaming it today. I think I'll be streaming it at like 4:30ish. So we'll do 4:30 for the stream. We'll talk about Netflix while we're on that stream. Okay, Tesla today, up or down? So here are the expectations. 24.06 billion in revenue, up 12% year over year. EPS of 74 cents, down 22.6% year over year. Automotive gross margins just under 20% and 19%. Automotive gross margins minus your credits, about 17.7%. Those are the subsidies the government gives to buy an EV. Free cash flow of 2.59 billion and CapEx of 2.03 billion. I tweeted last night before I went to sleep, I wonder what Elon is thinking now that he's, the chief executive of such a big company. He brought Tesla from nothing into something. What does he think before these earnings calls? Because at one point, I think a few years ago, he said he was tired of earnings calls and he didn't want to hop on the call anymore because he thought it was pointless. And then I realized Elon's an attention whore. Like, a lot of us, and he came back because he likes the attention. So I think what he's thinking about is what funny joke can he crack. I don't know if he's necessarily nervous anymore going into these earnings calls, but I'm pretty excited for what Tesla is going to be able to show. The biggest thing I think Tesla needs to be able to do, because the stock, as we can see, has been incredibly resilient. I mean, just absolutely amazing. Right now, 253 in the pre-market. It's basically after it jumped from 170 in June to the 200s. Let me just show you right here. Since then, it's basically been stuck between 230 and 250, which is really nothing when it comes to volatility for Tesla, because obviously Tesla tends to be a little bit more volatile from there. Deliveries, they've missed on it. We also have to talk about Lucid in a second, which didn't do as well on deliveries. And automotive margins are down, obviously, with the price cuts, but that doesn't mean the stock has suffered. So as you can see, on August 18th, we bottomed at 215, and since then, it's been stuck in this range. And the lows were below 200 in May, right? 184. Then by June, it ran to 270. I think it even ran to 290 on those earnings. And then even when it dipped, it was at 240. And so the major dip was at 215, but since then, you're not getting those 180, 170 prices that you got in May. It's just stuck in this 200 to 250 range, 230 to 250. And so we're likely going to see, I think, some strength in Tesla, because if it's been able to stand out all the bad news over the past couple of days and the past couple of weeks, as Victor says, it holds pretty nicely, I don't think it necessarily collapses today, along with the macro getting a little bit better. Down, especially if Elon gets on the earnings call. I actually think Elon's going to, do a good job. I think questions around the bot, questions around FSD, questions around robo-taxis, those might be there. But I think the broader question to me, honestly, I think the moneymaker question that people really want to know about, you might think it's margins and cars and Cybertruck, which, yeah, all those things matter. I think it's Dojo, because the Jonas Brothers band basically said that Tesla is a $550 stock with Dojo, and they're going to eat NVIDIA's lunch to an extent. If that ends up starting to happen in 2024, and we know that Tesla needs the compute, then maybe there is some revenue opportunities there. Tesla Energy is going to be interesting. Obviously, that's going to get triple digits year over year. The Cybertruck, I don't know when it's going to happen. They may make an announcement today that the first Cybertrucks are finally delivered to some employees. Hopefully, that'll be a good announcement. But in general, I kind of have a good feeling. I don't think the stock needs to tank. And if it does tank, it'll be on something stupid, which I think will probably be a dip that's worth buying. I don't think it's one of those days where they're going to announce something so bad that the stock's gonna get destroyed. Obviously, sales in China aren't doing as well in Tesla, so that's another sort of hurdle they have to deal with. But I just don't think, if the market's been this resilient with Tesla, I don't think some little bad news on China or Cybertruck or deliveries or margins is what tanks the stock today. Now, I could be wrong, and the stock could just go to crap, but we will see what ends up going from there. Why did Elon go to Japan a month ago? He did go to Japan, right? I think he also went to South Korea. I think he's just going to talk about more factory locations. If I might be wrong on that, but I think that's why he's going. Cash King says, what is baked into Tesla's $800 billion market cap? It can't just be cars. Yeah, it definitely can't just be cars. I think it's FSD. I think that's a big component of it. And we're seeing with the Twitter videos that Elon's posting that FSD 12 is becoming phenomenal. The problem is it hasn't been rolled out at a mass scale. And I think that's going to take more years than people are giving it credit for. But again, the market's not going to take away the premium for the $800 billion in market cap because the FSD growth is in the future. I think the market's absolutely willing to trust Elon and give him the premium right now and let it grow into its valuation. I think that's historically what's happened to most growth stocks. So I don't know if that, the fact that cars aren't the core thesis around Tesla is the reason to take away the revenue or the multiple from Tesla, because those revenues aren't there yet. Charging stations. Oh, that's another point, Darpan. So this is another big point. Every single auto manufacturer besides Toyota and Honda have conceded to the NACS charging standard from Tesla. Hyundai did it last week. And I think Honda did it. I might be wrong about Honda, but I know Toyota for a fact hasn't done it. So if that's the case, on top of that, you've got charging station revenue that should be coming up next year. And we'll be seeing more, hopefully, results from that to help earnings writ large. FSD, software revenue, energy, Dojo, robots. Yeah, I mean, look, a lot of times the stock price is more narrative than fundamentals, and there's a lot baked into the narrative of Tesla. So there's no real reason for why I would imagine Tesla gets the multiple away from that. Let's get an update from an analyst and what he thinks. His argument is a little bit more bearish on Tesla.
We have our Phil LeBeau on all the time. He says that's the metric to watch when it comes to Tesla. Give us a sense. That decline, do you expect it to be as bad as the estimates are? And what does that tell us about Tesla?
So I look at the adjusted auto gross margin, taking out the ZEV credits and everything else, that should fall by at least 100 basis points. You've seen 20 to 25% price cuts this year, and they're going to put through more price cuts to make their bogey 1.8 million units. That means that keeps dropping. So last quarter stock hung in there because consensus was that was going to be a margin trough. Clearly, it wasn't the case. We were of that view the whole time. Question is, when does this stop? Does the bleeding continue into the end of 24? I don't know.
All right, so you're calling this bleeding. Some of the bleeding you're talking about is the price cuts when it comes to the Model 3 and the Model Y, both in the U.S. and in China. So you're the analyst. Give us a sense. When does Tesla stop dropping prices?
I think they're going to do it the whole way through next year. I think Tesla's going to be putting through negative price cuts, and I think they have to do it to drive volume at this point. Clearly, there's a slowdown in the industry. It's impacting everyone. Tesla had, obviously negative unit growth sequentially and is having a lot of pressure. They're not immune from this. So they're going to do everything they can to hold on to their market share and remain the leader, which they will be.
All right, so we're seeing some pressure on the numbers. That's what everybody seems to be expecting across the board. But if you don't mind, we had a conversation before we got the show on. You said there's going to be a little drama on this earnings call. We're not talking dancing robots this time.
No.
What's the drama that you're expecting?
So the question is, are we going to see earnings actually contract in 24? And people are going to be looking for breadcrumbs around that. And, they're going to have to do a really good job defending things to persuade people we're not going to see an earnings contraction in 24. This is a retail-driven stock. It is extremely important that they keep driving sentiment. And, you could very easily see a flip in sentiment. And, it's a buy-side consensus long as far as a trade. But many of them agree with me that it's egregiously overvalued, and the people will be willing to punt very quickly.
Using SAT words, egregiously overvalued. All right, I want to hit on one other.
Okay, egregiously is not an SAT word. We're not gonna. If you're part of the word of the day, mollycoddle is. This guy's definitely giving some mollycoddle. He's mollycoddling Tesla in terms of giving them a lot of attention, but that's an SAT word, not egregious. Let's be adults here. Egregious is not an SAT word. Okay. Look, one of the points that he does make is legit, that if there is a perception that in 2024 there's an earnings contraction, meaning I think Tesla is growing at 45% year over year. I could be wrong about that. That is below 50%. They're still above 40%. If that number starts to dip into the high 30s, yeah, the market's going to be a little worried there. The market's not going to be that excited. Granted, that's why 60% of the stock is owned by retail, and retail has got into 20x's, 30x's over the market because the retail understood the story. Now, the bear case against that is that retail understood the story, and then we printed $7 trillion, which is what made the story become the story in 2019. That's always the bear case for why the retail that got Tesla right didn't really get I mean, look, the bear case for retail getting Tesla right is that retail got really lucky that we had a global pandemic and that the Fed printed trillions of dollars. There was a ton of stimulus that forced people to learn about the stock market, Robinhood, GameStop, etc. That created a ton of money into Tesla because of Elon Musk's personal brand. People realized, oh, he has a public company. They started buying it. It started going up every single day. They kept buying it, and then got to the point where it was up 20x, and then the market just didn't take it down. That's the bear case for how retail got rich off of Tesla. The bull case is retail just understood the company a lot better, and then Tesla grew a lot in 2019, 2020, S&P 500, all that stuff, and they benefited from that. And so the bears consistently say that retail is no more than a leprechaun that found a pot of gold, right? Incredibly lucky for getting into Tesla when we printed $7 trillion. And now that that's starting to go away, we're going to see that contraction. And when Tesla was at $100, that argument was kind of proving true. But then over the year, Tesla came up and you started getting the institutional analysts saying, no. There's real money here. There's a real big story here. And that story has kept retail involved, which is why the stock is, just below $1 trillion right now, which is basically where it was at the peak, right? The peak was $1 trillion. Right now it's 800 billion. So this earnings is going to either validate or not validate the retail story, but I don't think it does invalidate to the point where we fall back below 200. Like, I just personally don't see that happen. And so we will see where it goes from there. Matt says, is there really a retail-driven stock at 800 billion? Yeah, that's a good point. I mean, that's also a good point. You've got a lot of institutions that are taking big bets on it. And obviously, Kathy and Ross that took big bets in the past, they've made phenomenal because of Tesla. So Raphael says, sometimes I think I had luck. I got in before 2 stock splits and the S&P 500 inclusion. Yeah, and look, I mean, if you just bought it because you bought it and you didn't know anything about Tesla, then it was definitely probably luck. Just like I had Tesla pre-split at like $20. Again, I sold it very early because I didn't understand what I held. But I bought it in May of 2019. I bought it very cheap. I bought it the day Morgan Stanley said Tesla to $10. If you guys remember, there was a price target on 10. I think, was it Adam Jonas who put that out as well? It was a $10 price target. And I remember just like, this is stupid. Tesla was like 170 pre-split at the time I was buying it. I don't know what that is adjusted today, but I bought it very, very cheap. And I sold it, right? Because I didn't understand it. So there was a lot of people, but that's what I'm saying. A lot of people are just getting into the retail market and they started buying it. And if they held, they ended up doing well. If they didn't hold, they ended up not making as much. Okay, cool. So that is the Tesla earnings. We got about 10 minutes until the market opens. And obviously, Tesla is going to be big news for today. And the other thing that's going to be big news for today is Netflix. Now, we talked about Netflix a little bit yesterday. I want to just reiterate that just a little bit before we get into it, and then we'll move on from there. Then I want to talk about ASML. The big thing about Netflix to me is subscriber numbers. If subscriber numbers come in bad, that affects the rest of the business because net income, revenue growth, the opportunity to show to the market that actually we do have a growing story and that growing story is like pretty big. If they don't show increased subscriber growth, then that's going to be tough. Now, they're expecting 6.2 million subscribers. The problem with their subscriber growth, and this is why you always have to look at subscriber growth with a grain of salt when you look at Netflix, is that the cost per acquisition for each of those subscribers is pretty substantial. Last time I checked, it was almost $280 to get a subscriber onto Netflix, which means it takes almost 24 to 36 months for them to even break even on that subscriber. So they have to get an influx of subscribers, and those subscribers have to really love the product enough to not unsubscribe, right? Because if 1 month there's just there's not enough good content, there's going to be pretty big churn, then they leave. I think what Netflix has announced today, I think they're going to beat on pretty much every metric, even if it's slightly. I think they have to announce a slate of content plans going into 2024 that are substantial. Because if they do not have a substantial way to understand where the growth is coming from, for example, Squid Game 2, right? Do you have other things like Squid Game in the book that you can bring out that can make shareholders happy? Because as of now, I'm seeing a lot of good movies licensed on Netflix, but those are going to go away in the next couple of months, right? Those movies last only for, honestly, a few months. What is their original content programming like? The second thing I'm looking for from Netflix is capitulation from the other streamers. If the streamers cannot turn a profit on the flagship shows that they have, Paramount has some, HBO Max has some, can Netflix start licensing some of those back? So Friends, right? That's a staple, and Fresh Prince of Bel-Air, The Office, etc. They're probably not going to get those premier names, but if they can start licensing some of those names back from the original streamers and get them onto Netflix, Netflix becomes a go-to platform. So for example, Dawson's Creek, which is the best show of all time, in my opinion, it is literally better than every single show on the planet, and I don't want to hear a debate about it. Dawson's Creek was on Netflix. That's how I discovered it in 2020. And then it left, right? Can you get those shows back onto the platform and get more people excited for that? If you can, then I think Netflix has a plan going forward. If not, then Netflix is going to have to make original content, and that original content is just not going to be exciting, at least for me. So we will see what ends up happening with Netflix, but it's going to be an interesting earnings to hear from them as well. All right, moving on to ASML. So a semiconductor reported, or a company at least in the semi space reported today. This company is headquartered in the Netherlands. I actually know some people that work at this company, so really interesting company here. ASML earnings down 4% today. Profit decline in the third quarter, but beat estimates as its forecast 2024 revenue will be flat. ASML is one of the most important semiconductor firms in the world, producing machines that are required to manufacture the most advanced chips globally. The Dutch firm has also been caught up in tensions over technology between the US and China because of how important its tools are. Fun fact, we had a foreign exchange program with Dutch students back in 2015, and they brought us those waffles, those like strudels, whatever you call them, like the waffle chips or whatever they are, and they were really good. Okay, net sales of 7.1 billion versus, so 6.6 billion euros versus 6.71 billion expected. So they decreased some net sales. Profit 1.89 billion euros versus 1.8 billion expected, so they beat on profit. Net sales rose 15% year over year. Net profit jumped 11%. I think their guidance is low, at least for the upcoming quarter, which is why we're seeing a little bit of a decline. ASML net bookings in the third quarter was 2.6 billion, which was a 42% plunge from quarter over quarter. That's also not the best for the stock. Reaffirmed guidance for net sales to increase 30% year over year. Obviously, we saw Nvidia decline dramatically yesterday. Let me pull up some of these semis stocks. And Nvidia declined because ASML came out, or the United States came out with another ban on exports to China for the H100 chips and processors. Nvidia now down another 3% in the pre-market at 427. This was a stock that went from 412 2 weeks ago when the S&P was 100, was at 419, went up to 460 as the S&P 500 came back. Macro got a little bit better, and now it's at 426. ASML, let's take a look at that, is down 4% on the day. Yeah, down 3.6% to 586. We're seeing also weakness in AMD, down another 1.65%. Intel, down 1.39%. And TSM, down 2.09%. Super Micro was up a little bit yesterday, but today down 2%. So semis are in a tough situation. If you own semis, you're bleeding a little bit on those companies. Again, ASML, not horrible earnings, but not as much as the street expected. And honestly, down 4% is not that bad given how they showed the profit declines. But Nvidia being the one that's suffering the most from the proposed regulations yesterday around chip sales. So semis are in a little bit in a tough space. Stroop waffles, that's what they're called. Stroop waffles. Okay, got it. Stroop waffles. Yeah, they brought us a bunch of Stroop waffles and we were eating them. P. Morton says, admit, please stop. Gilmore Girls is far more superior to Dawson's Creek. I tried watching one episode of Gilmore Girls and I couldn't get through it. Dawson's Creek, trust me, guys, wherever you got to watch it, it's better than The Sopranos. Like, I know I'm from New Jersey, The Sopranos, whatever, but Dawson's Creek is better. Dawson's Creek is better. Matt says, Netflix content is great. Admit, you probably only watch TV once or twice a month and use your parents' curated account built up against what they would watch. On my personal account, I am overwhelmed. I think people who like premium type of content, then it's overwhelming. The problem for me, man, is like I try to find something, and maybe I'm just risk averse to taking a shot on a show, which I don't think I am, but I guess I probably am. Like I'm even surprised I clicked on Dawson's Creek. Like, that's a show from 1998, bro. What prompted me to click on Dawson's Creek 2 years ago? I have no idea, but I did, and Netflix recommended it to me, so I commend Netflix for that. But they need more of that content. Kelly says that's why we're breaking up Gilmore Girls. Dude, Dawson's Creek is better than Gilmore Girls. Don't give me that. Dawson's Creek is. You guys haven't really watched it. It's a coming of age teen romance at a time where there's not Snapchat. I mean, I cannot explain how special that is. Okay, now season 5 was a little but season 1, 2, and 3 were just amazing for Dawson's Creek. So I think it's like top 5 shows of all time. And Breaking Bad is top 5 shows of all time for me as well. So Dawson's Creek is up there with Breaking Bad. Anyway, Nvidia now at 426. All right, we got 2 minutes till the market open. Before we do the market open, real quick, let's do some Palantir news. Palantir has launched a further partnership with the government of Ukraine, which is what we're seeing here. Now, I did a video on this yesterday on the Daily Palantir Show. You can check out some of that. But we have an official in the government basically saying Palantir will be partnering with Ukraine's government in analyzing humanitarian demining data. This means we'll use AI to process vast data, make decisions, prioritize tasks, and accelerate the demining efforts in Ukraine, which is really great for Palantir. We know they're working deeply in Ukraine, but now they're just continuing to work even more with Ukraine. They gave some videos right here of showing how the fragmentation of data structures are related with each other and how Palantir basically uses an ontology to bring them together. The second photo shows data layering on the platform, which allows for a comprehensive analysis of information and provides a complete picture of decision-making. And the final video shows the artificial intelligence tool becoming a virtual assistant that can generate quick analytical reports. This is also what one of the VPs of the Digital Ministry of Transformation showed yesterday on their Twitter. So right here, what does this mean for shareholders? I think we're going to get a lot of money from Ukraine. Like, I don't know when it's going to happen. Obviously, we gave them our software for free, but I think the corresponding byproduct of all the work we've done in digitally transforming and eventually rebuilding an entire country, which needs to be rebuilt, that's going to result in some money. Whether that's hundreds of millions or $1 billion contract, I don't know, but we should be seeing some money from Ukraine, I would say, in the next couple of years if we're doing this much work for them and if their officials are talking so publicly about us. And so hopefully we see some of that revenue growth going into the future. All right, we got 40 seconds until the market open. I started a war in the chat around shows. One Tree Hill, my mom used to watch. I never got into it. I know that's a soap opera. My mom used to like it. Beverly Hills, I never watched that, but I know that's an important show, I guess, for some people in the 2000s. Saved by the Bell, I used to like it. I like Saved by the Bell, but it's not as dramatic as Dawson's Creek. It's like a comedy, you know? It's not exactly my cup of tea. But I like Saved by the Bell. I definitely watched it growing up. Dawson's Creek is just a different level. Money Heist is too long, bro. Like the filler, it's like I have to skip every 5 minutes just to get to the action. That's one of the things I hate about Netflix shows. They have too much filler in between. But Money Heist, not a bad show either. All right, here we go. October 18th, 9:30 a.m. Thank you all for being here. The stock market, once again, is open. Wake your ass up. As a reminder, the stream is now in 1080p. So if you aren't streaming in 1080p, just click on that button because I upgraded today. And we will be doing Tesla earnings today at around 4:30, and we'll keep going from there. All right, NVIDIA, 427, down 2.6%. We expected this. ASML down 5% to start the market open. We expected this again with declining profits on ASML, and for NVIDIA, the chip ban that came out yesterday from the United States going into China. So NVIDIA is down. Tesla being pretty resilient, down only 1.15% today. We have earnings later at 4:30. S&P 500, 434. Down, but not down as dramatically. The S&P 500 has not touched that 420 range, stuck from 432 to 436, so not bad for the S&P 500. Fubo, I know some people own this stock, down 1.3% on the day. NASDAQ down about 1%, 99 points, 13,436. SMCI is down a little bit. TSM is down 2%. AMD is down 1.68%, and Intel is down 1.3%, all with the semis. Palantir continuing to be green, baby. Palantir, $17.98. Look at that, 2 cents away from that coveted 18 Dolores, up 0.77% of the day. Again, Palantir going down a lot, but Palantir coming back up. You know what it honestly feels like? It feels like Palantir in this $16 to $18 range is a game, but seeing it go from like $16.40 to $18 within a matter of a couple of hours gets me as wet as a squid that I think I should go back to Netflix and watch Squid Game. That's the price action that's happening on Palantir. It's making me incredibly excited to see it be as resilient in this $17 range. We'll go back to that in a second. Amazon at $129.44, down 1.5%. Google, $141, continuing to get back to that 52-week high of 142.38. Google continuing to be resilient, and I think Q3 earnings is going to be monster for Google. I think Google is going to do well, and maybe they have a chance to inch up to that 145 range as well. Robinhood at $950. Robinhood got hammered over the past couple of days, now seeing a little bit of momentum. Where's Bitcoin? Bitcoin fell from that 29,915, that up almost 9%, now down 28,365. That spot ETF eventually will be approved. So I guess that was a preview of what will happen when the spot ETF is approved. But as of now, not approved yet. Uber at 443, Netflix at 352, Raytheon and Lockheed Martin continuing to go up. This war looks like it's going to be long, and there's going to be demand for weapons. Lockheed Martin's earnings were not good yesterday, but the demand for weapons is likely going to increase, especially in Israel and obviously from Ukraine. So we're going to see probably some increased pressure there, and at least the market perception is going to be excited for that. JP Morgan is down a little bit. Wells Fargo is down. Citigroup is down. Let's check out TFC. I thought TFC earnings were today, but they're going to be yesterday. $29.44. Again, TFC just doing pretty good after the sale of their $10 billion insurance business. They'll probably announce it tomorrow. I'll be up early listening to TFC earnings and see what they have to say, but TFC not bad. They're going to be reporting tomorrow, and let's see what they have to do. ARM at $52. XLF, the bank ETF, down a little bit, 0.61%. CrowdStrike continuing to maintain its premium as well. It was hit 190 at the top because of the Israeli war. And again, you're going to need more cyber intelligence, and CrowdStrike is one of the key players for that cyber intelligence. So that's what we're seeing there as well. I'm looking at the chat and seeing some of you guys didn't appreciate my Squid Game joke. You know, the Squid Game joke was even better because we were just talking about Netflix shows. So I think you all need to get a little bit of a sense of humor because that joke was pretty elite in my opinion. And honestly, I made the same joke on my Palantir Daily episode yesterday and no one commented on it. And I'm not going to lie, it hurt my feelings because I thought that joke was really good and literally no one commented. So either it flew over people's head because the joke was too good, or people just don't appreciate humor. I don't know what's going on in this world. SLG will be reporting today after hours at 35. This is one of those stocks we found at 19. I don't own it anymore. I made some money off of it. It had a great dividend, really great valuation after it fell from COVID. $2 billion market cap, about $13 billion in assets. So not bad at all for SLG. And Meta at 324, continuing to hit their 52-week high. I think Meta earnings are going to kill it as well. I think Meta is going to be great. I mean, it might be baked into the stock a little bit. It's the cheapest big tech stock in terms of market cap, but it's not the cheapest in terms of PE. So Google's cheaper than Meta on a PE basis. on a market cap basis, Meta is the cheapest one at $837 billion. Is Tesla actually cheaper? Where's Tesla? Tesla's at 858, right? No, Tesla's at 807. Okay, so never mind. Tesla is the cheapest when it comes to just purely market cap. Palantir, there we go, baby. 1810 on Palantir, up 1.35% on the day. There you go. Palantir, $18.09, continuing to just do a decent job with some of this price action. Again, we saw it fall below 17 yesterday. And this is what I'm liking about Palantir, that the price action is starting to be really resilient between 16 and 18. We haven't even seen like 1640 for a while. And so as a result of that, I think we're seeing a lot of benefits towards the market perception on on Palantir. Palantir now falling right below 1802. But one of the things that's going to be interesting into earnings is what they're going to announce. My expectation for earnings is that revenue growth is not going to be substantial enough to justify some of the premium we've gotten. But even if we beat by a little bit and announce some deals, we can fluff it up, right? We can fluff, because remember, the growth's coming in the future. So we need to fluff it up until the growth comes, because the growth's not there yet. And maybe that's customer growth, maybe that's AIP, whatever it may be. But the growth is just not going to be there in terms of revenue. None of the contracts we're getting are going to have a substantial impact in Q3 revenue. So the question becomes, can the market live with the overvaluation and the justification for the premium if we fluff up the story? And I think they will, but we're going to have to see how the market ultimately decides to value it in the future. Carlos and I think Meta will kill it too, but the it we're referring to is probably not the same thing as your it. Yeah, there are some people that will just never buy Meta because of ethics, but Meta's still probably going to do well on earnings. Airlines, let's check on airlines. Delta is down 4% on the day. Oh wow, airlines are down. American down 4%. What happened to the airlines? United down 6%. What happened to the airlines? What's going on? Huh. That is interesting. You got Palantir green, airlines are red. Austin, what's up? Thank you for being here. Gas prices. Do you think that's the reason for airlines? Hold on. Let me just look down. Airline stock. Let's do a Google. Let's see if there's any news. It might be gas prices. Gas was up 2% on the day. So obviously that affects fuel prices for airlines. But I don't know. I think there's... I see it. I think United gave earnings today. Yeah, that's why we're seeing it. So United... Oh, let's talk about that. That's a big deal when it comes to earnings. Let's talk about that for a second. Okay, so we're seeing right here, United shows profit decline and weak outline. Let me share the screen right here. United reported yesterday. Oh, so I'm looking at it a little bit low. Yeah, so I'm looking at it a little bit late. But this is what we got. Yeah, this was this morning, October 18th. But United drove 5.4% toward a 9-month low to lead the Jets ETF losers after the air carrier beat third quarter profit expectations, but provided a downbeat fourth quarter outlook. So guidance was bad, citing flight suspensions to Tel Aviv. Wow. United said their fourth quarter outlook is going to be bad because they had to suspend flights to Tel Aviv. That just shows you how fickle these businesses are. If you read 0 to 1 by Peter Thiel, he uses in the first chapter airlines as one of those businesses you never want to get into because they're not monopolies. They have too much competition. Flight suspensions to Tel Aviv is what the CEO used as his excuse for why fourth quarter outlook is going to be bad. That's incredible. And you can't blame him because, Tel Aviv is a international tourist location. There's definitely a lot of flights a lot of business to be done there. But if you can't send flights there, then that's not good. Delta's down 1.2, American Airlines down. Wow. And so that's why we're seeing some of the uniqueness in the airlines today. The 10-year, let's go on that. You guys are saying the 10-year in the chat. Let me pull that up. 10-year currently is at 4.87, continuing to inch higher. That's not good either. There you go. The 10-year at 4.872. Look, if you're a bear in this market, this is your best bear argument, in my opinion. These 10 years getting to, that's at 4.9, and that's not at 4.85 where we were rounding up to 4.9. Now it's 4.87 where you can legitimately round up to 4.9. That 10 year goes to 5%. We're going to see some issues, especially in the equity market. Oil right now is at 91.43. It's up 1.7% on the day, a little bit more than where it was up in the pre-market when we were checking it out. that's where we're seeing a little bit of a decline. Austin Smith, can you explain the 10-year and what it is and why it matters? So the 10-year treasury is a contract you enter in with the U.S. government for them to give you a fixed return of on your capital you invest every year for the next 10 years. So when you're entering into a contract with the U.S. government to give you 4.87% on your money, the question becomes, where can you get that return from somewhere else? And obviously, the reason you're entering into this contract is because you're buying U.S. debt. The government will take your money. They will finance the activities that they have to do within the entire government. And they will say, hey, Austin, thank you for giving us $100,000. We're going to give you 4.9% on that $100,000 in the future because we're using your money right now. And the assumption is that the U.S. is good for that money, right? And that's why we're always going to trust that the government will end up paying their dues. Now, the problem is if the government is giving you such a high return in terms of the yield on your capital to finance their debt, and the stock market is not giving you that return. In fact, the stock market is giving you a negative return. If you invested in United, for example, you're down 7% today. Why would you invest in United and take all the risk of this business doing well when the government can give you 4.9%, basically 5% on your cash? So the more that 10-year goes higher, which means people are selling off those bonds, because if you're selling off the bonds, that means the bond yield has to increase to entice people to buy the bonds. So we're seeing a lot of sell-off of those bonds. That's why we were worried Japan was going to sell off a crap ton of bonds a couple months ago, but that ended up not happening. They're the biggest buyer of U.S. debt. If people keep selling off bonds because they don't, trust the U.S. government, that yield goes up, which forces, people to come back in and buy some of those bonds because they're getting an attractive yield, which means equities can't really do that well if the yield in the stock market that's taking all the yield in the stock market is not as great as the yield in the 10-year, which is taking all the liquidity from the stock market. And so that's kind of the core problem we're seeing with the 10-year being as high as it is right now. So that's not the best thing that's going on right now. Josh says, if you don't know what the 10-year is, don't invest in individual stocks, buy index funds instead. Yeah, I mean, I don't fully agree with that. I think, you can learn about what the 10-year is and still buy individual stocks. Look, the problem with index funds is I think the S&P, I saw a statistic yesterday on Twitter. Inflation is up 20% over the past 3 years, and the S&P returned 23% on average over the past 3 years if you annualize it. And so you're only beating inflation by 3% if you invested in the index. And the argument in that Twitter post was like, index investing is not good enough anymore because it can barely beat inflation. Obviously, there's a lot of nuance to that. It comes with risk tolerance, and do you understand what you're buying in equities? And I'm definitely not the smartest equity investor itself, but it definitely goes to show that the indexes themselves, they can barely beat inflation. So it's a tough situation to kind of be in the index and get a 20% return, which is awesome, but still succumb to inflation. Palantir now at 1787, falling below 1810. So we're back in the 1787 range, but we are green, which is not bad on Palantir. Google is green. PayPal, of course. Why wouldn't PayPal be red? It's interesting. I like PayPal. I have PayPal. I have about $10,000 in PayPal. There's a lot of people on Twitter that really don't like PayPal. I was watching some, let's call it Twitter beef yesterday. I tweeted the Michael Jackson eating popcorn emoji looking at that beef. Because people were really arguing back and forth. There were people saying that if you invest in PayPal, you are the greatest idiot in the world because you don't understand anything about Ethereum and how Ethereum is the next generation of fintech. So for all the bulls that may be out there on PayPal, and I know, it's a mainstream stock. Obviously, Jeremy loves it. There's a lot of people basically saying you're an absolute moron if you're investing in PayPal. The fun thing is, one of us will be right. It's either going to be them or it's either going to be me, included in the PayPal mafia, I guess, of people that are interested in this stock. And I just, from a valuation perspective, I think PayPal's undervalued. I don't think the story has broken around, people don't use it anymore. I think that's garbage. I use this thing every day. I think it's more so a question of the stock is broken, the business is not broken, and the stock will eventually reflect that. So it'll be fun if PayPal gets to 100 by next year, and all those people calling us morons will, have to recognize that valuations actually matter. And you can't just say Ethereum is, the biggest thing in the world. Will you do portfolio updates again? I think everyone knows my portfolio. My portfolio is Truist, Robinhood, Palantir, SOFI, PayPal, and Google. Those are the 6 companies. I'm pretty sure everyone knows that's my portfolio. So nothing too different there. ETH is a scam by XRP. I would trust XRP over ETH. A lot of people tell me XRP is way more useful than ETH. The reason I don't like ETH is because the only value I saw in it, let's go to it right now, was NFTs. And legitimately, NFTs are done. So it's at 1,500 and I know it was at 900 at one. I get it, but I really don't know what companies are using ETH or what crypto infrastructure it's providing to the world. I mean, I would bet on Bitcoin before I bet on Ethereum. But people are saying this is the reason why PayPal is dead, because Ethereum is going to take over. And I'm just like, do you realize the average person just needs to send money? They don't care. Like, this is the problem with some of the crypto people. They don't care. Remember when DAOs were a concept? Does anyone put in the chat if you remember when DAOs were a concept? Decentralized autonomous organizations. Please tell me someone remembers when this was a thing in 2021. Because I've got some N-Phase too. I've got a little bit of N-Phase, yeah. I remember on Twitter in 2021, I was arguing with people saying DAOs are the dumbest thing to exist. Like you want it's basically a company through a Discord that makes autonomous decisions without a structure of a CEO, CFO, CMO, whatever. And you just put everyone together and you use tokens and like the decentralized, democratized tokens to be able to make decisions. I was like, this is a train wreck. It's the dumbest thing in the world. And people were like, no, DAOs are a thing. DAOs are not a thing. DAOs are gone. There is no decentralized autonomous organization. It's not real. Like, you need structure. You need actual institutions. You know, for all the anarchists that exist in the world, you actually do need a Federal Reserve. So, I mean, at some level, I think a lot of this stuff is just nonsense. But will the coin price probably go up? Sure, because people will speculate on it. Amazon at 129, Google at 140, Palantir at 1790. All right, so we got a red market. Not as red as what I expected today, given some of the 10-year going higher, S&P doing pretty well, the index not being too bad, but overall not being as bad as what gas prices inflected as well. Also, Morgan Stanley doing well on their earnings, Procter & Gamble doing well. So we got some good earnings today, keeping up the market a little bit. Let's get an update on Netflix. Here is a preview on why people are a little bit nervous going into Netflix today.
Let's start off with that net subscriber number. The guidance is a bit higher. They guided that it would be similar to Q2, about 5.89 million, but the estimates are coming in lower. What are you expecting when it comes to net subscriber ads? What's your rating? What's your price target?
Yeah, we're buy rated on Netflix, and our target is 500 a share. We are a bit nervous, I would say, about
500 is a lot, so I'm curious about why that's the case.
This earnings report. Not so much about what they're going to report in the third quarter. It's more about the guidance they're going to give for the fourth quarter. And so our view is we sort of need to have a clearing event on the stock and get sell-side estimates lower before we can get back to the long-term positive story around their ad tier.
All right, so $500 price target. Still, you see a pretty big upside to the stock. I want to ask about that average revenue per user. So the stock's taken a big slide since the investor conference. Executives said they believe that average revenue per user is under a lot of pressure because all the growth's coming from outside the U.S. For example, when you look at Asia, users pay almost half or about half of what they pay here in the U.S.
Yeah, that's wrong. They pay like 1/3, bro. They like, my cousin told me she pays like $3 for Netflix, and she's in India. So that ARPU is gonna be tough.
How does Netflix address this issue? And this stock is certainly one that tends to trade on this idea that they're making money per user.
Yeah, I don't think the mix shift is necessarily a big negative, but what they do need is a counter narrative to sort of allow the average revenue per user to move in the right direction. And where folks rightly had hung their hopes was on Netflix's ad tier, because in total, if you have a lower subscription price plus a lot of ad dollars, you can get more aggregate revenue than you would under the old ad-free model. Investor sentiment is a little bit dented on that because they fired the head of their ad unit, who's only been there about a year. And so people know things are not going as well on the ad tier as they hope. I think the ad tier is going to be fine in the long run, but that's what we need to see. We need to see more progress on the ad tier to get the ARPUs up.
So seeing a lot of reports that Netflix is planning to raise prices after the actors' strike is over. What do you think about these reports? What are your thoughts? And does raising price, does that put pressure on subscriber ads, or does it just generate more revenue?
Well, the good news is everyone in the industry on the streaming side is taking pricing up. And that's a good thing because everyone except Netflix is losing money in this industry. So getting pricing up is good. What I would say is that all of these apps are so much cheaper than linear television that I think, at least in Western markets, there's scope to take pricing up probably.
Yeah, and that's a good point. They can always increase prices. That's the other. I mean, look, that's the easy thing about Netflix. They can increase prices. Now, look, if they increase it to like $24 for me, I'm canceling. I do not like Netflix. Granted, I think my sister watches Netflix, but even my parents don't watch Netflix anymore, bro. My parents got this bootleg box from some dude in a truck that has all the Indian programming they need in the world. I'm sure if you're Indian, you're relate. Your parents probably got that same box, and they don't even watch Netflix anymore. So there's really no reason for me to have it. I haven't canceled it in 10 years, but I mean, if they increase prices to a stupid level, then I'm not gonna be interested in Netflix. Let's get an update on SoFi. We actually haven't looked at the stock today, but I want to show something I tweeted last night. I tweeted some hardcore due diligence on SoFi. So if you're not following me on Twitter, you need to follow me there for the due diligence. There you go. SoFi is now above Robinhood in the iOS App Store for the first time in a few months. And this is really important because Robinhood has beat SoFi for a very long time in terms of the App Store. But SoFi last night ticked above higher. Now, I was really, as a SoFi shareholder who has substantially more in SoFi than Robinhood in my portfolio, I saw this yesterday and I was really excited for it. And I was like, yo, this is great. This is awesome. I'm happy for SoFi. And then, then I looked at my iOS App Store charts today, and now Robinhood is 25, even though it was 35 last night. SoFi was 34, and now SoFi is 35. So within a few hours of me tweeting that incredible due diligence about SoFi doing way better than Robinhood in terms of user acquisition, customer costs, right? They're just like ranking up the iOS App Store numbers. Robinhood beats it by 10 points. This is why I like Robinhood, bro. They like people download the app because they like that app and they find a way to get momentum. Whereas SoFi, again, it's a way better business than Robinhood, down 1% of the day, 8.15. But their user acquisition, I don't think is as similar to Robinhood in terms of app downloads. So yeah, now I changed the sentiment. But look, at the end of the day, I think SoFi is going to have a really good earnings. I think we could hopefully see the stock rally back towards that 950 level. That would be really awesome. I don't know if it stays there. They would have to announce something really good. If they can announce their gap profitable, I think a lot of the concerns around SoFi are going to be gone. Now, they're going to probably announce it next quarter, not do it this quarter. So that's the part where shareholders just have to be patient. But if they can, then I think that's going to be great. And again, remember, I think the reason SoFi spiked up yesterday on the iOS App Store chart is because that Taylor Swift movie, the Swifties, the Swifties did it. They saw SoFi at the theaters. They were like, Taylor's at the theater. Taylor's at the stadium. We have to support Taylor. Let's download SoFi. So maybe the Swifties are the reason I end up making a shit ton of money from SoFi. And Fred says, in the 90s, I remember paying over $10 a month just for HBO when it was just a single channel. Netflix is a bargain at any price. I agree. Definitely cheaper than all the cable services we used to pay for in the past, which is probably, a great bull case for Netflix. I just think the content's got to get better. They got to get Dawson's Creek to come back. They got to, the content's got to get, maybe I'm such a YouTube junkie. I'm so biased here. Maybe that's my problem. I'm so in love with user generated. I'll watch a video of, someone like in a lake that has 10 views. I'll actually click on that. I'll give them a shot. I really care about supporting new creators and things like that. So maybe that's just me, but I do appreciate the premium stuff. I think Netflix hasn't had the best premium stuff in a while. All right. I think that's pretty much it on today. One more update on the 10-year. 10-year at 4.86. So down a little bit from 4.87. Stocks, S&P 500, currently down 433, down 0.52% on the day. NASDAQ 13,446. And let's check on oil real quick. Oil still at 91.43. So remaining unchanged, up 1.7%. And then finally, Palantir, 1778. So Palantir now officially red for the day. Peaked at 1822, got sold off. People ended up buying it. Now at 1777 for the day. All right, that's it for me. I'm going to the dentist today, so I will be at the dentist a little bit later. I should be able to talk for Finance Junkies, but I will be, I think, getting another crown at the dentist because I'm a king and they're crowning me. At least that's what the dentist told me. Here's the word of the day. I can't make this up. This word of the day website is very interesting. Yesterday was mollycoddle, to give incredible attention or exuberant attention to something. Today it's screaming memes.
Screaming memes.
Dude, how is this a word? This doesn't make sense. Extreme nervousness, anxiety, or hysteria. Screaming memes. The horror movie gave me... It sounds like something a 3-year-old would say, bro. Oh my god, the screaming memes. Like, what? What do you... The dark and eerie forest triggered the worst fears, sending him into a state of screaming memes as he imagined all sorts of terrifying scenarios lurking in the shadows. Okay, I guess so. Sometimes the stock market gives me screaming memes. Bro, I cannot believe this is a word, but it's look at it, even spelled it. I guess it's a word. It's a noun, folks. Screaming memes. It makes sense. Halloween's coming up, right? So yeah, hopefully we don't have too much screaming memes in the markets. Anthony says I'm also headed to the dentist. All right, it's dentist season. We're all heading to the dentist. Are you using the Urban Dictionary? No, I'm using dictionary.com. I should be using Urban Dictionary, but that would probably be inappropriate on many days. Garcia says screaming memes is when my son doesn't want to go a meme. I love it. All right, everybody. Thank you for being here. I appreciate it. Finance Junkies will be on today. We'll have another daily Palantir show. A lot of people are liking the format of one episode, lots of segments. So we'll have another show out today. Talk more about Palantir and all the news going on. And that'll be it. Thank you, everybody, for joining. Have a great, great Wednesday. I'll see you all tomorrow morning. Bye, everyone.